I'm Alan Kenny, Editorial Director with REIT.com, and welcome to the latest edition of Quick Study with my colleague Brad Case. We're going to talk a little bit about the performance of the REIT market in September. Brad, looks like a pretty good month. Any general reaction to how things went?
Yeah, it was a strong month for REITs, and that's striking because the 3 or 4 months before September, REITs had been outperformed by the broad stock market. But as we know, historically speaking, usually it's REITs that outperform the broad stock market. During the month of September, REIT investors made more than 3.5% in just the 1 month. The S&P 500 was up just over 3.1%. So a very strong month for REITs. And actually another striking fact is that it was across most of the REIT market. Mortgage REITs returned about 3.7% during the month, equity REITs about 3.4%. So all parts of the REIT market really outperformed the broad stock market, and it was a very good month for investors in REITs.
Let's dig a little deeper on that point. What sectors in specific stood out to you?
If you look at the strongest performing sectors of the REIT market during September, the 2 strongest performing sectors were the lodging sector and the self-storage sector. In the lodging sector, it's been a tough economic downturn, and that's really affected lodging REITs, and so we've seen them coming back a little bit more strongly, and so that's nice to see. Well, self-storage REITs have been among the strongest performing sectors over the last decade, so it's not a big surprise that they're yet again a strongly performing segment of the market. But as I said, it was really across the entire REIT market. There was really no segment of the REIT market that performed badly during September.
Okay, let's look a little bit farther out. Longer term returns, what are we talking about with REITs versus S&P?
Oh, it's really striking because 2013 has been a terrific year for the recovery of the broad stock market. And REITs, had of course recovered earlier, and so 2013 hasn't been such a strong year for REITs relative to the broad stock market. And yet, after all that tremendous performance in the stock market this year, if you look at the last 10 years, REIT investors have gotten 9.7% per year total returns, and whereas the stock market, it's been 7.6%. So REIT investors have gotten 2% more per year over the last 10 years than investors in the broad stock market. And that outperformance by the REIT market is true of literally every longer historical period as well.
Thanks a lot for the update, Brad.
Good thing.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.